Hello, everyone. Welcome to this week's weekly market view for Monday, the 23rd of September 2024 to Friday, the 27th of September 2024. My name is Vishal. Let's get started. All right, so let's start with the Nifty analysis. And as you can see, I have a slightly different layout. This layout is based on the intraday time frame. So you can see all the indices uh, um, with 15 minutes across all the instruments. So you can see Nifty 15 minutes, Nifty Bank 15 minutes, Financial Service 15 minutes, and so on and so forth. Okay. So instead of analyzing the daily level now, we are going to be looking at some key 15-minute levels because most of the indices now are trading above their all-time highs, which means there is no overhead supply. So let us look at some of the key levels based on demand and supply with a slightly intraday to a slightly swing perspective for the coming week. So let's start with the Nifty. So this is how the market opened today. As you can see, 25,900 is the call open interest, and that is where exactly the market is facing a little bit of a pause. 26,000 is the highest open interest, so we might start heading towards that level. In case if the markets do not move towards 26,000 and start falling towards 25 from 25,900, then we have a fresh level of demand over here. We're going to mark that level. And this is that rally level 25,675 to 25,596. We could consider this gap level also of demand, but this is a slightly better level in terms of the location. Let's move on to the Bank Nifty. If you look at the Bank Nifty also went on to make all-time highs. And now the key level or the closest level of demand for Bank Nifty is going to be this area here. This is that drop base rally of demand from 53,416 to 53,224. So this is your closest level of demand. There is no overhead supply on Bank Nifty. So every pullback, we are expecting the prices to move up further. Let's move on to the Nifty Financial Services Index. And the Nifty Financial Services Index more or less has a very, very similar level to that of the Bank Nifty. This is the key level, drop base rally level of demand. 24,637 to 24,523 on the Nifty Financial Services. Again, no overhead supply. We do have these open interest levels stacking up here. But because there is no supply, there is no question of even thinking about going shorting for these indices. Let's look at Nifty MidCap Select now. And Nifty MidCap Select is slightly different as compared to the other indices because we saw a pretty nice and a deep corrective move. Now, what has happened is we have come into this area of supply, which is this rally-based drop. It's a pretty strong area of supply. We already had a touch once on this supply, and right now the markets are just hovering. Today being the mid-cap expiry, we might see a little bit of volatility coming around this area, but because we are closer to this level of supply, we might see a little bit more of a bearish pressure than a bullish pressure on mid-cap. The highest open interest, however, is 13,300, and the highest put open interest, where the strongest support is lying at 13,175. So this is more or less the range that we are expecting the mid-cap is likely to move today. 13,240, 13,284 is the closest level of supply from current market price for mid-cap Nifty. Let's move on to Sensex now. And Sensex also pretty much as the other indices has this key level of demand. So there are similar levels of demand all over. What is nice to also see is that there is this nice open interest level, 84,000 level, lining up with this level of demand zone, which gives us a little bit of a more conviction that if prices do pull back towards this level, it's likely to give us a bounce and continue to move to the upside. What could be the upside targets for the Sensex? 85,000 can be the first target. Of course, on the downside, we have one level at 84,500 where markets can take a pause. And then we have the 84,000 level coinciding with the level of demand. All right, let's move on to the Bankex index now. And again, nothing much to say about the Bankex index. Pretty much behaving similar to Bank Nifty and all the other indices, Finnifty, etc. This is the area drop pace rally 60,490 to 60,254 will be the key level of demand on Bankex. Today is Bankex expiry, so we can see that 61,000 is going to be a crucial level of support for Bankex. And to the upside, we have 61,300 on levels. So in case if 61,000 breaks and Bankex starts, to retrace on the lower side, then this is going to be a very, very key level of demand. Again, because of expiry today, we are seeing the levels to be in a very, very tight range, close to around 300 points on Bankex. So again, no level of supply on Bankex. Markets are just creating new levels of demand, indicating that there is still a lot more of upside left in this market to come in the coming days. Unless and until demand zones start violating, it's only then we can probably start having a short bias. But at the moment right now, it's all long bias on all the indices. All right, so now let's move from the indices to the commodity markets, and let's take a quick look at all the commodities. Let's start with gold, and this is the daily chart of gold. As we have been saying since the past week, that gold is in a very, very crucial level of supply. And this is where likely things might take a possible turn on gold. 74,500 to 75,000 are going to be key levels for gold, but we are in a very, very strong supply zone. So we do expect some correction coming from this area of supply right towards 73,000 on gold. Let's move on to the next commodity, silver. Silver has just fallen a little short in terms of the supply area on silver is at 91,813. But because now gold is in also a supply level, that is the reason why you are seeing a little bit of profit booking coming on silver. In case if this profit booking starts on a very strong basis, then we might see 85,000 or even 84,000 levels on silver very, very soon. All right, let's move on to the next commodity. We have copper, and copper has made a nice low, and this low was printed somewhere on the 5th of August 2024. Since then, we have seen an uptick on copper. Today, we are seeing a little bit of a sell-off on copper. Will this sell-off lead to more selling pressure on copper? That only time will tell. But we are also seeing that the highest put open interest on copper is at 800 odd level. So if this level holds, then we might still see a little bit of a further bounce on copper towards the 838 to 851 levels. So we have got to be a little patient, since copper is going to probably move a little bit slowly than expected as compared to the other commodities. Let's look at natural gas. So this is the chart of natural gas. This is the daily chart of natural gas. I'm just going to refresh the graph here. Let's quickly have a look at some key levels of natural gas. All right. So on the daily chart, natural gas has opened gap up. 210, 215, 220. These are going to be the key levels of resistance. But we do have a level of supply drop 225 to 233 odd levels. So this is going to be a key area of supply if natural gas does get there. At the moment, right now, natural gas is more or less moving in a very consolidated to sideways range. And unless and until 2110 crosses and closes on a closing basis, we are probably not going to see a strong uptick in natural gas. But if that happens, then we might see levels of natural gas hitting 225, 233 levels of supply very, very soon. Let's look at the next commodity, which is crude oil. And again, this is also going to be a very, very interesting analysis here. So we are seeing a little bit of an uptick on crude oil. Now, markets are consolidating. We see two levels of supply. In fact, this is your first level of supply drop-based drop. And then we also see another level of supply just on top of it. We call that level on top of level. And what is going to be interesting to see is what does crude oil do once it hits these crucial supply zones. Right. So right now, if you look at the crude oil chart, we are printing a low, and more or less markets are pretty sideways at the moment. This is the low that was created on 21st March 2023, a year ago, in a few months. But this is where market has held and taken a little bit of support. Now we are trying to push to the upside. Whether this supply will induce more selling pressure on crude oil is something interesting to watch out for. We have some confluences of open interest levels around these areas. So it'll be interesting to see once price hits 6,200, what is the reaction of crude if there is any kind of selling pressure coming in. But these are the key supply zones. Once price gets there, we will have to be very, very cautious on longs. And primarily, the focus will be more on shorts. All right. So I hope you enjoyed the analysis for this week. This is pretty much from my end. If you do like our channel, hit the subscription button and press the like button. And if you do like our analysis, do give your valuable comments in the chat box. We'll definitely look forward to add in more instruments, more time frames, and do this analysis with you every week. Thank you so much, everyone. Have a lovely week and safe trading to all of you. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.